Hello, everyone. 3 p.m. You would not believe. Just before I came online and I was on the call with IRS, and guess how long you wait? 3 some hours. Then after that, and then they run into my webinar time, so I have to close them out. It's like you can never really call IRS. And the best way to work with them is actually writing to them or use their forms. So today, we're actually talking about a form, right? W-4. And this is a form probably everyone who works in US would have to use. A lot of times, people don't know what they're doing with the W-4. They don't know the consequences of W-4. They're just like, oh, it's just form. I'm going to get paid by the employer, so I'll just fill it up, and to the best of my knowledge. But that would cause you to maybe end up paying a lot of taxes without mental preparation. So we always want to say to you that every form that you fill out with IRS, you would have to understand what they're saying, what they're doing to you, right? I know it is a lot of small prints. It is a lot of reading. And this is where, at our firm, I always tell folks that people who work with me, I tell them that for IRS letters and IRS form, you only need to read it from the left top corner down to the right hand bottom corner. You just need to read this whole page thoroughly one time. If you just do that one time for anything that is new to you from IRS, I promise you, you suddenly realize that you know a lot more than anybody else, because there's no secret, right? There's no secret why I am talking about W-4, because I already read it. I already did it. So it is a thing that easily understand. So we won't waste any more time. Let's go ahead and start talking about W-4. And if you are the one went to the tax preparer, something happened to you, and it is just like, oh, why do I owe taxes? You suddenly didn't understand why you're making the same salary, you're getting the same income, but why suddenly I'm paying taxes? So right before we go into the preparation we have done for you for the PowerPoint, and let me just brag to you about a little bit of our firm here. And I want to show you that our website, just because this is where you will find us. See those webinars that's coming up, and every webinar we do, and you would find the copy of that webinar right here on our YouTube channel. And we really are becoming very well known to the internet followers, just because our videos are very quality in content. We don't run around and rambles, and we don't just give you nothing. And when we focus on something, we make you the expert. So we want you to know as much as what we know. And that's our business. Seriously, that's our business, because I know the more you know, the better our service can be. Because if you don't know anything, you come to get service from us, and we really service you from the bottom, right? Because you don't know anything, so we service you at your level. But if you know more, and we service you at a higher level, so it's really up to you and how excellent of service you will be getting, and by making sure and you learn what you need to learn. All right, so today's webinar is about this W-4 forms. I pulled it up from IRS website. Remember, I always tell you that on internet, I don't go for some, unknown sources. I really do rely on governmental website, and I believe everything they post there is what I am going to go by. So I pull out the W-4 and I start to fill that up. But let's just go into our organized webinar content right here. So about W-4, okay? W-4 is a withholding form. It is literally a form. You tell your employer how to reduce your gross pay. If you got paid $5,000 a month, you actually fill up W-4 to tell your employer that, oh, withhold $1,000 for me, or just withhold $500 for me. That's what you're saying to your employer when you fill up the W-4. And of course, and the speaker information, I have quite a few of you, and I actually surprised about the number of you today. And my name is Ying, and I am the managing partner for Community CPA. And here I serve on National Taxpayer Advocacy Panel, and this is a Federal Advisory Committee to IRS. Okay, and here's my email, and you literally can talk to me about things you like IRS to improve, and I'll take your input to the committee and going through committee work, and then we submit that to IRS. All right, and of course I have a book on internet called Appointment with Ying at 8 a.m. and 8 a.m. fresh. Everything starts just at that time. And this is where how you start a business. And I have an audio version on there too. Audio both in Spanish and English, just in case you like to listen instead of reading. There you go. And a no responsibility disclaimer always has to be there. And because I don't want you to rely on internet information. Internet is entertainment. So don't rely on that information, and you really do need to do your own research and take responsibility. All right, and what is W-4? W-4 is employees withholding certificate. Yes, it is. If I work for Community CPA, of course I work for Community CPA, I fill up W-4. I fill up W-4, so Community CPA will withhold the right amount for my paycheck. Okay, so every employee must be filled in. And of course, this is not the only requirement you have for your employee, right? Okay, business owners, you need to get W-4 from your employee, but you also need to get what? I-9 from your employee, because those are two documents required by IRS for you to have in store. So it's very likely the Department of Labor would come in and goes, by tomorrow, supply all of your I-9s from your employee to our office. They don't give you time. They want to see that you have it right away. So that's what I-9, okay? That I-9 is a form that you fill in all the identity related information. W-4 is a certificate form where you give out your information so they can withhold, your employer can withhold the right amount. All right, so the latest version of the W-4 has been effective since 2020 tax year. So they're just talking about W-4 changes from time to time, but since 2020, they were looking the same. Allowance and exemption. See, look at this one. So in the, the inside of the W-4, they are actually doing two things. They give you allowance, which means that, you actually don't need to pay taxes yet because you got this allowance, offsetting your taxes. Exemptions, things that you don't need to pay taxes, you want to tell them. So there is content inside of W-4 allow you to tell your employer, hey, withhold less for me. All right, so now this is the part of the form. I'm going through these. I'm breaking down the form for you, but later on we go to the website to do a real one together with you, right? This is the personal information. You as an employee, you would fill in your first name, your last name, and you notice that it's 2022. So if you are hired in 2021, you would fill in the W-4 for 2021. If you're hired in 2022, you'll fill in the W-4 for 2022. All right, but let's say if you hired a long time ago, but now it's 2022, you just got married and you had a life-changing event, and then you want to request one. You want to tell your employer that my life changed. Can I get a new W-4 to you? That's what you're going to do, right? So here is the address. That should be your home address. Sometimes people don't pay attention to the address. Let me tell you why it is important. Because your home address is actually linked with your state tax return. So let's say if you put in the address wrong, let's say you are residents of Nevada, but you put in the address of your mom's address because your mom lives in Iowa. And if you do that, your employer might be withholding Iowa income tax on you because you are residents of Iowa. They don't know that you're using your mom's mailing address, right? So just be really careful about your address because you want to reflect on where you really live. Now, the single or married file separately, and the married filing jointly, or qualifying widower and head of household. So interesting, let me tell you something really interesting. Before George Bush, when George Bush became president, this is before Obama, right? And so what he did during that time, he took away what we called marriage penalty. At that time, before 2008, at that time, if you're married, you actually pay more taxes. You actually pay more taxes than two of you are not married or single and single. And he took away for that, he took away of that. You see, the single and the married file separately are actually listed the same. What does that mean? That means if you're married, you file separately, you're actually treated as a single. So that marriage penalty is gone, long gone. But sometimes people are still struggling with the thinking of, oh yeah, should I file married separately or married jointly? Of course, there is a 1 or 2 reasons for people should be filing jointly, especially if you have small children and the kids and the people who are, your children are still live with you. And a lot of time is beneficial to file married file jointly. But if you are like kids growing up and just you and your husband, nothing will stop you from filing separately. So you need to make a choice. This choice is important because this is what gonna use to decide when do you start paying taxes, calculating your withholding, right? What do we mean by calculating withholding? Calculating withholding means based on the projected income, how much income tax do I supposed to pay in the year? And the employer will use the W-4 to calculating your income and calculating your deduction. So they will calculate your taxes properly. All right. So that's why it's called withholding certificate. So withholding taxes properly based on the information you give, right? So that is the mandatory piece. Now, the next pieces. So the next pieces is for people and whose circumstances indicate that they should withhold more or less than standard amount, right? And it provides different options for you to calculate and, for example, multiple jobs. So if you worked on multiple jobs in that 1 year, and you really need to be careful with your W-4 filing on your second and the third job, because when you don't do that, your employer treated you as if you haven't even made any money in the year. So let's say you change your job in June of 2022. You go to a new employer in July of 2022, and you better fill up the W-4 with your July employer saying that this is your second job. Because otherwise, withholding not going to be right. You're guaranteed to pay taxes at the end of the year. So here on the step 2, you would check mark on this box. I'll go through how to fill up this form and on IRS website. But just follow me on understanding all of it. Okay, so that step 2 saying calculating second job, you see it give you this page to calculate your 2 jobs, 3 jobs, and this is the section where you have a multiple job worksheet. They give you that. They give you multiple job worksheet. They also give you a table. So let's say your spouse makes 80,000 a year, but you yourself makes 20,000 a year. Then your 80,000, 20,000 give you what? 4,760. That's a magic number. You use that number divided by how many times you get your paycheck. Are you paid bi-weekly? Then you divide it 26. Are you paid monthly? Then you divide it by 12, right? So you divide that. So 4,760 divided by 26, that'll give you about $180. And then that would be your additional withholding, folks. All right.
Ying,
so this is
could you take out your alerts?
Oh yeah, sorry. Oh, I didn't even look at that screen. Thank you, Kat. Just watching, making sure I'm doing it right. So folks, so you saw where I was pointing, right? Is 80,000 is the higher income spouse. 20,000 is a lower income spouse. So we zeroed into 4,760. That divided by bi-weekly, and that would be the additional withholding you need to have on your paycheck. So this is another form, but it just gives you the single and the married file separately. So especially for married file separately, I'm pretty sure if you're single, you just have one payroll and you don't, you want to make sure that this is your second job, not just your two of you, right? You actually had a second job, then you will compare this second job and with your first job, then you'll come up with the total. All right, same with head of household. So let's say you change job in July. So your first 6 months, your gross salary was 30, but now you change job in July, you got paid 300,000, a lot more. Then you will choose that 200 to 449, and then you will go to the 30. So you have 11,480 divided by 12. Okay, divided by 12, even though you just had a half year, but this is just to calculate your monthly extra withholding. So when you divide that by 12, it's about 1,000, am I right? So you would be withheld more, 1,000 more. All right, so this is the second job issue. It's actually with the job market the way it is, who doesn't have a second job? I mean, majority of the people, majority of the population has been changing jobs like baby change diapers since last year, October. Don't you agree? And, I mean, maybe you're not the baby, but someone who works for you is the baby. So they're changing diapers that way. So it is a phenomenon. And there's more and more people having that issue. So when they file their taxes, they were like, oh, my withholding is wrong. It is not wrong because you never calculated the second job when you submit your W-4 to your second employer. Okay, and then there's also instruction related to dependent, right? So here, just by simply reading the form, if your total income will be 200,000 or less, multiply the number of qualifying children under age 17 by 2,000. So you have 5 by 2,000. So this is where you're going to put it in. So what does this do? This will reduce your withholding. So if someone goes, oh, I just don't want any withholding. Well, I guess you can, you shouldn't. But I have seen people filling in 6 dependents. True or not, I don't know, because those are, one of the employees of one of our clients, right? So maybe they do have 6, triplets had twice, that's 6, right? So, but if you have that many dependent, you probably never will be withheld for any taxes if you make less than $100,000. Now, step 4. Step 4, it is where extra withholding is calculated. Okay, and how that calculated is actually coming into this calculation. So I will go through that calculation with you because it is rather interesting. And so after you calculate it, you will have a other income, not from jobs, you will fill in here. Deduction, if you expect to claim deductions other than standard deduction and want to reduce your withholding, use this. So you will fill in the dollar. And for example, a good example will be if you were having a loss on your investment, say you sold the investment property, had a huge loss, and you know that those losses going to come in, you have a K1 with a lot of loss. If you know you have that in 2022, you should just put in the number. Your loss is 100,000, put in there. Then you won't have any withholding. Okay, so that's where, it is not the loss, otherwise the employer would know. It is what you know about your losses. So this is the place to come in to deduct. Extra withholding will be calculated and enter any additional taxes you want withheld each pay period. So you also are, maybe you are someone and very cautious about paying taxes and really don't want to owe taxes to the government. That just makes you sick. And for your health sake, and then you will put in the number here. So don't get yourself into that situation, right? So now deduction worksheet, this is the worksheet that we're gonna look at quickly. And then the last step, it is actually required. It is you are going to sign it. And normally you should sign your name and the date you signed. Okay, so like I mentioned to you, if you worked with the employee for many years, you probably nobody gonna give you W-4 for you to fill in. But if you just happen to marry to someone and this person makes so much money and you really need to reconsider your W-4 because you're gonna be under withheld, then when you go to the tax preparer and you are just like, no, Ying, what happened? Why am I paying taxes? Why? Because you forgot to update your W-4, right? All right, the employer information. So you submitted your W-4. Then your employer will be putting the address, first day of your employment, and their EIN number. This will be properly properly stored with the HR division. So this is literally a complete process of W-4. So this is a repeat of our employee's signature right here. You sign your date. And when to revise W-4, of course, we kind of mentioned whenever you have a triggering event. I call that triggering event. Okay, so triggering event can be a birth of a child and a married or divorced, and a new freelance job is take off, and just a lot of money come in, or lost a lot of money. Lost a lot of money on the stock market, and you did a mark-to-market election, so it's all become a real loss. Boy, you don't really have any reason to pay any taxes for the next 10 years like Donald Trump, like our President Trump. And somewhere, somehow I read that he doesn't need to pay taxes just because he has so much loss in there. So I'm pretty sure when he filled out W-4, and the right thing to do is to put in a couple $billion and a couple $1 million on losses, and where I was saying you put in losses, and then he doesn't need to pay. And I don't know whether he has a paycheck or not because I'm not his accountant. Now, let me take you to our website, to the website where we can actually see the W-4. All right, there you go. Now we have a W-4. And I started to fill it up already because I was worried about running out of time. We seems to be okay. So the first name, Ying, and last name Sa, and this is my address, my home address. Not really, this is our office address. But the reason I want to emphasize on that is has a lot to do with your state withholding. Just please do not And do not just say that, oh, it's no big deal. I'm just going to put my mom's address on there. No, don't use mom's address because that may be triggering different withholding. Then, of course, I check the married file jointly. That's my status. And then I actually choose to check on the second job. The reason I choose on the second job because my spouse also have a job. So I don't really want to withhold my salaries without considering that he is making money as well. And of course, this is kind of made up. We don't have children qualify. We don't have children under age 17 anymore. So I really don't qualify for that. But I just made an imaginary child for myself and I put a 2,000 in here. Okay, so that 2,000 will tell that I claim dependent. So when I say that, then the withholding is already adjusted because when you put in the child for the 2,000 and in the employer's payroll software, as soon as you put that in, the withholding got reduced. If the employer was going to take $10 away from you, now it's suddenly reduced lower than $10. All right. Then you can see I don't have any deduction. We will look at the following page to calculate deduction and see I had extra withholding calculated. Where is that come from? I'll show you. But you see right here, this is the main page. This is the page that you need to give to your employer. Not any other pages. There's more pages in the back. There's 3 more pages, but they're not for your employer, only this page, because you will come in here and you will sign. You sign your name and you put in your date, then your employer signs and put in your date of employment and also put in the EIN number. You see how that just comes through just that way? And so now let's look at what's going on the following pages. Of course, the second pages are just a lot of chit chats about what to do and, instructions. Actually, they're really, really important. And I don't know how many times, and, I can act like I'm really smart only because I read the instruction. Okay, instruction is boring. But if you just consciously think that, okay, I really want to walk a very solid step in my finance life. I want to make sure I know where my money goes. I want to make sure what I pay to IRS, and just require yourself whenever you see a document that related to your money and you're going to take a deep breath, read it from the left top corner to the right bottom corner, every page. But I promise you, you only need to read that once. With the IRS documentation, they are produced systematically a lot of times. If you read something once, next time it shows up, you skim so fast because you already know what they're saying. And it is really not that hard to be expert. Okay, so I want you to just simply read the instruction. Of course, not today, because I want to lead you really quickly to go through this. Remember, we were calculating the $80, my spouse income, and the 20,000, my income. Then I came to that crossroad. That number was 4,760. Remember that? So now 26 paycheck biweekly. So that's a 183. So I am asking my employer to withhold $183 more every paycheck from my paycheck because I have a second job. I have a spouse who has another job. But what if I have a second job? Same thing, right? Same thing. So now let's see deduction worksheet. Remember back to the first page, we have this extra withholding worksheet and this deduction worksheet right here. Okay, so now deduction worksheet. What is deduction worksheet? It's really just trying to figure out how much should reduce your payroll without paying income tax first. So let's say I have 19,900 right here. So what I am saying to my employer is that if I make only 19,900, don't take anything away from me. I don't need to pay taxes for this one. That's what I'm saying. So now look at this. So it says that itemized deduction. So folks, you know what itemized is, right? Your medical expenses plus your car tag, plus your property tax, and plus your donation, and plus your church tithes, and all of these is your itemized deduction. And I put in 15,500 because that's what I have. But what is my standard deduction? 25,900. So what does that mean? That means I should use standard, shouldn't I? Right? So I use standard. But now I have 6,000 because I know that every year I buy traditional IRA for $6,000. So I'm going to reduce that. So now what is the amount? It's a 19,900. Okay. So actually, no, I'm sorry. I should add this one. I'm sorry. See, you got me making mistake. Aren't you proud? So that's a 25,900 plus 6,000. I am so scared of doing math in front of people because I know I'm going to do it wrong. And someone was saying that, you know, my spouse, he is a finance math professor. So I am accountant, right? So people will say, oh, two of you must be really good with numbers. So, you know, we will chuckle because I'm really bad with numbers. So I am born into the time computer is being used. So it's very hard to do it manually. So this, what it says is, if I make $31,900 total salary, please, employer, don't take any tax from me because that is my deduction. So come back here, folks, come back here and come back here. And then my deduction is what? 31,900. Okay, so when you put that in here, other income from, not from other jobs, but your other income, like your capital gain or the things that you make, and or maybe your side jobs that you make, you put that in. So this will be all the information your employer need, then your withholding will be correct. So this is all the content we want to give you today, so you know how to work your W-4. And I want to make sure that I didn't have any questions coming through. All right, so I think I'm good with, I was just looking at the chat to make sure don't have any questions. Folks, this is our 3 o'clock on Tuesday. I will see you again on Saturday. Saturday, 3 o'clock is always my time. And this Saturday, let's go back to our website. And this Saturday, Kat, you didn't put that in. So what is our this Saturday? We will post that on our website so you can get to that. And anything we talk about, it will come into here. And folks, I'll see you again. And thank you for joining Community CPA's webinar online. Bye-bye.